Hi, it's SteveDepoe from the Rose Realty Team. Thanks for coming back. Our last vlog we talked about, the introduction to getting ready for a first-time home buyer, and you came back, which is good news. Now we have the first in our series of 5 videos about first-time home buyers. We're going to get into that right now. So coming at you today, first steps for first-time home buyers. First-time home buyers, part 1, first steps towards first-time home buyers. So step 1, the first step towards home ownership is what I like to call the preparation phase. Prepare a monthly budget and stick to it. Find out and improve your credit score. We'll touch on that in a moment. Pay off consumer debt and save money for a down payment and closing costs. Your financial advisor or a good lender can help you understand all these points a little bit better and possibly reprioritize them for your unique situation. We at the Rose Realty Team, we're real estate experts and not financial advisors or lenders. So if you need a good lender, we have a lot that we work with, and we can make suggestions to you. But ultimately, we're real estate professionals and not financial or advisors or professionals. You need to go to them for help. And again, we can point you in the right direction. Monthly budget. Your monthly budget is the first step towards becoming serious about home ownership. Housing payments can be as high as about 1/3 of your monthly income. Monthly debts like car payments, student loans, and credit cards should be reduced as quickly as possible and not exceed somewhere about 10 to 15% of your income. Save money every month for your future housing expenses like closing costs, moving, and maybe even furniture. Loan qualification. A lender's decision to make a home loan is based on the borrower's income, payments required on outstanding debts, assets, and credit history. A borrower is required to have adequate cash to make the down payment, closing costs, prepaid expenses provided in the purchase contract, and an adequate reserve. What this means is that once you get to the end of the process and you're closing on your house and you're signing that contract and signing the loan agreement, you can't borrow money from a friend or from your parents or a relative at that point. You have to have the cash on hand, because then what will happen is the lender will assume that you're going to have to pay back that loan or that debt, and therefore will be a stretch to make your loan payments. That's what this statement means. Improve your credit score. A minimum credit score between 580 and 620 is required and is typical for most lenders. Get copies of your credit reports. You can go to www.annualcreditreport.com. Review the reports for accuracy and correct any erroneous items on the report. Believe it or not, about 85% of all credit reports have some type of error. It's your obligation and your ability to go to the credit bureaus and correct those errors that are on your credit report. Pay all credit payments on time for at least 6 months or more. And pay off credit cards. Pay off consumer debt. Pay off your consumer debt by making extra payments to principal. Don't make any large purchases on credit like cars or furniture. The lender can help, your lender can help calculate debt ratios based upon current debt and will determine the size of the mortgage you can qualify for and therefore how much house you can afford. Remember, your financial advisor or a good lender can help you understand these points and possibly reprioritize them for your unique situation. There are no two buyers or no two lending situations that are exactly the same. Save money. Cash is king here, everybody. You will need money for the down payment, home inspections, appraisals, and other closing costs. A tight budget and some amount of patience could be needed at this point to get you to your goal of that first-time home. Remember, prioritize, prioritize, prioritize. How much house can you afford? As a general rule of thumb, very general, lenders will allow you about 1/3 of your monthly income to go towards mortgage payments. Or, a rough estimate, Your maximum mortgage is 3 times your annual household income. Again, your lender can help you understand these ratios for your unique situation. Now, we've just touched on first steps for first-time home buyers. Think about those. Try to understand them. If you have any questions, please contact us. Coming up next, how much can you afford? This has been brought to you by the Rose Realty Team. Call or text us at 817-368-6522 with any questions, or you can email us at TheRoseTeam@kw.com, and those are our 2 websites. If you're interested in advance notice of our next vlog in the series, call or text us or email us. We'd be happy to include you in our advance notice list. Again, call or text us at 817-368-6522 or email us at TheRoseTeam@kw.com, or just watch out for our next installment. Again, I'm Steve DePoe with the Rose Realty Team. I'm going to bounce.